And what an absolute crazy month March was. We saw interest rates hit 3.5 year lows, only to see them doing a about face and hit 8 month highs. And the main culprits, obviously, number one, inflation fears, uncertainty. Number two, a labor market that just has a hint of it's hanging in there. And then obviously, number three, the big one, the geopolitical front, the Iran conflict. So let's just give a quick recap of what happened in March. And then we're going to propel ourselves into our outlook and what we can see in April. Inflation seemed to be coming back. The market seemed to be opening up, the labor market hanging in there, but it was showing that it was under stress. If you recall, we had a non-farm payroll at the beginning of March come in at minus 92,000. That is horrific. In case you didn't know that negative 92,000 is bad. And what that was doing is it was pushing money into treasuries. People were feeling good. Hey, inflation's coming down. Let me guarantee myself a rate of return. Federal government's looking strong. Amazing. And then we had Iran. And what happened with Iran is obviously you now are getting into the Middle East and you're dealing with oil. And what it did is we're now looking at over the last 3, 4 weeks, oil over $90 a barrel, with it hitting over $120 a barrel. I think right now, today, it's sitting at 111. And what that does is it's increasing uncertainty and it's also increasing inflation fears, right? Because when you have the price of oil go up, it affects everything across the board, transportation and all the goods and services that we consume, let alone we as Americans, but on a global level. And that's why you saw interest rates just skyrocket along with it. Now, the good things that have been happening in the background is number one, this year, bank spreads have been amazing. They have come way down. If we look at them historically here, real quick, in 2020 and 2021, hey, they were a little bit out of whack, right? We had QE at that time. That spread range was really small because it was very low risk for lenders. In 2022, it was back to normal. We saw it heavily spike in 2023 as we were coming out of the pandemic. 2024, recovering ever so slightly, and we're getting back to normal as we speak. And that has really helped interest rates to where they are today. Because if I told you, hey, we're sitting at a war, we have oil over $90 a barrel when we were sitting at 60, we only have a labor market that has basically two sectors that are adding jobs. One would think that interest rates would still be over 7%. And if we had those spreads, that's where we would be. But the beauty is, right, with the beginning of March, we were seeing what the true economy could look like. And with those lower spreads, we were looking at interest rates. I was giving them away on a 30-year fix around 5.25%. So don't ever believe the national press with the interest rates that they're giving. Make sure that you call your local specialist so they can bring you up to speed. So that is March in a nutshell. If we pull up that 10-year treasury, here we were in the beginning of March, we were looking at lows right around here. That's when we were below 6%. Like I said, I was given rates in the low fives. We spiked all the way up, and now you're looking at rates definitely in the 6% range. And we seem to have stabilized a little bit here recently. So what is April going to bring, right? What is the outlook? I believe April's going to be a little bit more of the same. I think everything's going to remain a little bit elevated. Look, interest rates rise on an escalator and they take the stairs down. It's going to take a while. Trump just spoke last night. He indicated this could be 2 to 3 more weeks. And I've already been on the record. I believe we're going in with troops on the ground. I think at some point we're going to have to get in there to eliminate some of the threats and really take care of what we started. And I think that's going to happen here in small doses over the next 2 to 3 weeks to eliminate any potential threat that Iran may have to blackmail anybody with ships going through the strait and things of that nature. But let's assume that opens up. Inflation's still a concern. We are still going to have to absorb these last 3, and it's now going to be 6 to 8 weeks where we're seeing elevated oil. So now what is it going to do to inflation? Nobody knows. Even Fed Chairman Powell has indicated he's not seeing it transition over into the price of goods and services, but I indicate that is yet. So even though you're seeing good data now, that data is from February. March is going to be much worse given this conflict. And then we're not going to be able to get data that we can digest and know the true outcome of what has happened until we get into June and July. So what I see happening over the course of April is I see just elevated interest rates. I see a 10-year treasury hovering between 4.2% and 4.35%. That keeps those interest rates elevated. You're looking in the high fives if you're getting lucky. Otherwise, you're in that 6% range. So you want to get your information into your lender. Make sure that you're in a position, should something happen crazy, because obviously it can happen crazy. We've seen it so often, that you're ready to strike and take advantage of those interest rates. And then if you're a buyer or seller and you're worried about where interest rates are today, we're back to seller concessions. So if you're a seller, you have to start baking that into your pricing, realizing that, hey, if I'm going to go to market, I got to get competitive. We're back to offering seller concessions. I don't think the buy down is as imperative right now, simply because interest rates are going to get lower once this conflict is over. But right now, you're going to have to offer seller concessions. Also, I'd be talking to my lender about yield spread. I would be interested, if I'm a buyer, making sure that I am limiting my cost to get to the closing table, because I know, based on what I saw in February, once the economy gets back to where it's supposed to be, and I think we're going to get back to that level, but it's going to be in the late summer. And I think that sweet spot is going to be Q3, Q4. So you want to make sure you're in a position at that time that if you need to pay closing costs to get the best interest rate, you didn't just pay them now. Conflict like this gets everybody in quicksand. So it's going to be the serious players that are out there. So the opportunity for you to strike while everyone else is sitting on the sidelines to be a great opportunity to come in and scoop something up. So the few big things that I think we're going to see is, I think data is going to have to be digested by traders. They're going to need till June or July. It looked decent in February. I think it's going to look horrible in March once it comes out. So I think you're going to have to wait for that to catch up a little bit. In the meantime, traders are going to be cautious, right? We have another Fed meeting coming at the end of April. I think what Fed Chairman Powell has to say could obviously influence markets. So that's going to play into it too. We just saw him speak at the last Fed meeting. He wasn't really fond of where everything was headed. I thought that was poor on his part, because I think it spiked interest rates a little bit, only for him to recently come out with statements that indicated, hey, I haven't seen inflation flowing through from this rapid increase in oil. And that has pushed interest rates lower at the present time. I think you just have to be able to be strategic right now. Make sure you're limiting your exposure on costs for anything that you're doing, whether you're a buyer or seller or you're refinancing. I think the sweet spot, once again, I think once we get the data come June, July, is going to look a lot better. I think we'll get back to some normalization then. And I think once this conflict's over, you're also going to see those bank spreads decrease a little bit. They're going to feel a little bit better about themselves, right? So there's going to be a lot of things that are going to be better. It just doesn't happen overnight. Not when you have oil that is over $90 to $111 a barrel for the past 4 weeks, potentially going to be 6, 8 weeks. It's going to take time for us to get back to some normalcy. So be patient. If you're looking to be strategic, please don't hesitate to give me a call. Once again, my name is Kevin Weedmark, AKA the Mortgage Mouth. I lend in all 50 states. We'll have an opportunity to discuss your goals, how I can help you achieve those goals with full transparency, letting you see yield spread, bringing you under the hood so that you and I collectively can make great financial decisions for you now and in the future. I'm not looking for a one-time hit of, hey, what's your best rate? I'm looking for people that are looking to build wealth, understand that this is the largest purchase they're ever going to make in their lifetime. And they're looking for somebody that is in their corner, that is educated, that is transparent, that is authentic, and that is there to help them navigate the complexity of life and wealth building. All right, y'all. Thank you for tuning in. Any questions, please don't hesitate to bring them. As I said, I cut content on the daily on the channel, so please subscribe. Would love for you to tune in and listen in on the daily dose so you get a good update on what happened in the marketplace, how it affected interest rate, and should we float or lock. All right, y'all. Until next month. Cheers.